नमस्ते सभी को स्वागत किया है मेरे यूट्यूब चैनल से। और बात करेंगे आज आप लोगों के साथ AGI ग्रीन पार Q3 पेथ रिजल्ट के बारे में। AGI ग्रीन पेथ Q3 पेथ स्लाइड्स 21% YoY Amid Revenue Dip IS Retail Diversification. AGI Greenpac report a 2025 20.95 year-on-year decline in Q3 financial year 26. Consolidated project after tax paid to 71.45 crore despite a 5.34% QoQ revenue increase. The company board and approved a significant diversification into the retail segment and focusing on home personal care and ASIP where via and outsourced model. It also revised its investment in MOB AI, acquiring a 19.75% stake. The financial dip drive the numbers. AGI Greenpac's Q3 financial year 26 consolidated revenue stood at 633.69 crore, making a 3.76 decrease year on year. YoY, but a 5.34% raise. Qatar QoQ profit after tax paid saw a significant decline of 20.95% YoY to 71.45 crore, also down 5.96% QoQ for the 9 months ended December 31, 2025. Revenue grew 5.42% YoY to 1,922.93 crore, while PAT increased 4.64% YoY to 236.28 crore. EBITDA for Q3 financial year 26 was 152.92 crore, down and 16.61% YoY, and for the 9 months it was 483.67 crore, down 2.74% YoY. Basic earning per share EPS for Q3 financial year 26 was 11.04, down 21.08% YoY. The quality the Q3 performance indicators margin comparison with EBITDA margin likely shrinking YoY. The substantial drops in PAT suggested that cost and pressures on leaves and favorable revenue mix impact profitability more. Several dense revenue itself an exceptional item of 5.09 crore related to the incremental impact of the new labor codes on gratuity and compensate and absence was reported affecting standalone and consolidated result to no and specific cash flow or balance sheet data was disclosed in the filing. The company did not provide specific feature and financial guidance or outlook in this announcement. This lack of the forward and looking and the commentary leaves an investor with limited visibility on the management expectation for the upcoming quarters. Strategies analyze and the impact. The event, the board of directors approved strategies and diversification into the retail business segment and focusing on the home care, personal care, kitchenware, and tableware. This venture will be the managed through a completely outsourced model with the primary aim of increasing glass uses and offering comprehensive and customer solution in the parallel. The company revised the earlier resolution to the invest in the Modifier building as AI Private Limited, now acquiring 19.75% stake down from 25% from the approximately 4.45 crore MOB. AI operates in e-commerce B2B outline marketplace and the related technology. The retail diversification aims to tap into consumer demand and the created new advance for their core glasses products, even if indirectly the investment in MOB AI single a strategic pivot toward leveraging and digital platforms and the e-commerce to enhance a market reach and potentially create new businesses model. The appointment of a new COO for the Can Business Division and CEO for the Plastic Division suggested a focus on strength and operational leadership. Risks and outlook. Specific risks. The YoY decline in forward business performance in Q3 raised the question about the underlying demand trends, competitive intensity of operational efficiency within the packaging segment. The retail diversification, despite it being outsourced the career, execution the risks and challenge in the brand building and market penetration. The strategic relationship and expected return on the investment for the MOB AI stake and require further scrutiny. The forward view, an investor will need to closely monitor the revenue and the profitability trend in the core packaging business for the sign of the recovery or continued pressure. The, the success of the outsourced retail venture will be critical alongside the intelligence and impact of the MOB AI investment on AGI Greenpac overall strategy and the financial performance.